This is the 50th annual meeting of the World Economic Forum in Davos, Switzerland, and sustainability is leading the agenda. Environmental issues represent the top 5 long-term risks in this year's WEF's risk survey for the first time in its 15 years. Larry Fink, CEO of BlackRock, recently announced that his company will drop investments that face high sustainability-related risks. And other investment firms are adding a temperature score to their portfolios, an estimate of an asset's environmental impact. Doing less harm is an important first step, but it will take proactive, solution-driven investments to really make an impact. I'm here with Ibrahim AlHusseini, the founder and CEO of FullCycle, an investment firm focused on climate-restoring technologies. So tell me about your fund, FullCycle.
I started FullCycle with my partners to address an area in climate change that few are paying attention to, which are short-lived climate pollutants. So much concentration goes on CO2, which is a potent greenhouse gas, but there are many other greenhouse gases that are much more potent, like methane, hydrofluorocarbons. These gases are hundreds, if not thousands of times more heat trapping than CO2, and eventually they break down into CO2 anyway. So by getting rid of them, we're addressing, let's call it, the lowest hanging fruit in the climate crisis.
So how do you tackle these short-term climate pollutants?
Waste is a massive contributor to methane emissions in the world. So what do we want to do with methane? So garbage is a resource. We should not be burying it in the ground anyway. We live on a resource-constrained planet. So extracting fossil fuels, producing all this packaging, cutting down trees, making paper, all the food scraps that took so much to transport, to eat, to cook, to prepare, to do all of this with, when we're done with it, this is a resource. We should not be digging another hole in the ground and burying it in it. We should be using it for something. So now we have technologies that allow us to take all of this waste and turn it into value.
And this is an investment that you have in your portfolio?
This is a company called Sonova that is using a technology developed in the Netherlands by the Energy Center of the Netherlands that's now called TNO. It allows us to take commercial waste, municipal waste, industrial waste, anything that is not inert, and turn it into what we call a product gas that can be used to produce energy, that can be used to produce plastics. We can produce biofuels, and we can do it at economics that work as much for Jakarta and Mumbai as it does for Berlin and San Francisco. So it's not just a vanity project that we can feel good about, it's actually a solution to transform our relationship to waste. And our goal at FullCycle is to close all landfills in all nations in our lifetime.
But this is actually happening right now.
So this is happening in 4 different countries, but again, on commercial uses, for industrial uses, less for residential. Eventually we'll move into residential, but we wanted to address commercial and industrial first.
And as we know, in order to get people to care about stuff like this and to promote technologies like this, it's very helpful if it can be profitable. Can you make money investing in a company like this, and how?
Reversing the climate crisis is going to take aggregating a lot of capital. And we're not going to aggregate a lot of capital just because of ideological alignment. People, you always win if you bet on people's self-interest, and that means profit. So we specifically focus on the nexus between a gigaton of carbon equivalent or carbon abatement and a minimum of 14, so double-digit IRRs on infrastructure project level, and the ability to have long-term exclusivity on pre-existing terms with these companies so we can expedite the rollout of their technology worldwide. Because we're not a venture firm. We actually don't believe the venture model works to combat climate change, because venture means investing in early stage companies, and we don't have that kind of time frame. So we specifically focus on market-ready technologies and created a model that specifically accelerates the deployment of their tech so we can quickly transition from this current high carbon economy that we live in, that is causing all the chaos that it's causing, to a low carbon economy that's more harmonious and sustainable with the biosphere that we live and rely on.
And there was a lot of subsidizing of when solar was coming around, and that was drawing a lot of investment dollars in. Is there anything like that that is helping promote investment dollars, or that's giving these more of a lopsided return?
So not for us. We now identified, for example, Canada's giving incentives for RNG production, so we're taking advantage of those now in British Columbia. But in general, we don't pick technologies that rely on subsidies to actually become financially feasible. Everything we do has to both work financially without subsidies and without debt.
And Davos this year seems to have much more of a grasp and understanding of the climate change concerns. Do you feel like it's enough? Are there things you'd like to see next year?
There's so much money sloshing around in the world, and so many of its representatives are concentrated at this event. And we do spend an inordinate amount of time talking about what we're going to do, and it's just time to start doing it. Even if you consider the investing in something like FullCycle too good to be true, you still have to take the risk. Even if we don't succeed at reversing climate change, it's better that we went down trying than not to have tried at all.